Did you know that an expert sold all his stocks? This move shocked a lot of investors, and most of them became concerned as to what caused this. Is it time to sell off their stocks, or should they keep holding their shares? Make sure to stay tuned and keep watching to learn more. Most Tesla investors remain unshaken whenever there is news about the company. It is mostly because there's almost always news in relation to the company, so they are no longer concerned. However, there are some, especially new investors, who are usually alarmed when there is negative news about the EV company. Today, you will find out why an expert sold all his Tesla stocks. Ibrahim Al-Husseini, full-cycle founder and managing partner, recently joined CNBC's Tech Check to discuss what Tesla is worth and the price he'd be willing to pay to get back in. Ibrahim Al-Husseini is a renowned venture capitalist, sustainability-focused entrepreneur, and philanthropist with more than 25 years of experience in operations, sales, and finance. He's dedicated much of his career to helping angel investors find clean technology and natural resource-related investments in an effort to advance social change around the globe, while producing significant returns for investors. As founder of Full Cycle, Ibrahim is focused on reversing the effects of climate change by accelerating the deployment of climate-restoring technologies. Through his work, Ibrahim has developed an unparalleled network of industry leaders, investors, and entrepreneurs across the sustainability space. He has raised $500 million of capital to back dozens of companies. Throughout his career, Ibrahim has started and sold numerous businesses. He is the founder and managing partner of the Husseini Group LLC, a firm dedicated to facilitating, financing, and guiding ventures that embrace social enhancement and ecological sustainability. Additionally, he co-founded Natural Solutions Inc., a pioneer in the field of marketing natural industrial cleaning products. Pack IT Inc., a leading designer, developer, and supplier of cellulose fiber molding equipment to the packing industry. Mecca Communications, a company that designed and implemented private label instant messaging strategies. And EcoPerks, a startup with a loyalty program for environmentally conscious consumers. Raised in Saudi Arabia by parents who are Palestinian refugees, Ibrahim moved to the United States for college in the early 1990s. Graduating from the University of Washington, where he launched his first multi-million-dollar business out of his dorm room. Ibrahim currently sits on the board of more than half a dozen organizations that focus on the positive development of our environment and humanity, including the Culture Project and the Global Partnership for Women and Girls. In fact, Ibrahim is an early investor in Tesla. In a Nexus podcast, he said that there is a statistic that most people don't realize. According to him, in Los Angeles, if you stop at any traffic light, you're bound to see a Tesla, a Model Y, a Model S, and a Model X, a Model 3, some sort of Tesla. He claimed that it is pretty much the same in San Francisco, New York, and other major cities like Berlin. He said, Teslas on the road make up 1/3 of 1% of all cars on the road 17 and a half years later. That's probably the biggest, most obvious perceived climate success story out there. However, in an interview with Julia Boorstin and John Fort on CNBC's Tech Check, Ibrahim shared what he thinks about Tesla stock. After previously sharing his shares, he says that he is waiting for the EV company's stocks to dip below $400 per share before buying back in. It is worth noting that Ibrahim sold his Tesla shares when it was at about $1,000 a share, around $1 trillion valuation. John Fort then asked him what Tesla is worth and the price he is willing to pay to get back in. Ibrahim answered, "I was fortunate enough to look to see the company back when it was a private company and invested in late 2008, I believe, and sold the big chunk in 2013 and the rest when it reached over $1 trillion. In a different interview, he said that in early 2020, Tesla stock was worth around $300 a share, and it dramatically increased by 4.5 times that in 2020. He said that it is because now the world knows that this is a real cool business and that there are several electric car and hydrogen car companies today, and the electrification of transportation is inevitable. With its current performance in the stock market, would you buy Tesla stock today? Let us know what you think by leaving a comment in the comment section below." In his conversation with CNBC's John Fort, he said that he looked at something unique about Tesla, which is that 37% of its shareholders are retail investors, and the confluence of gamification of investment and free government capital, as well as Tesla CEO Elon Musk's constant reach out to said retail investors, was buoying the stock to such a degree that Ibrahim thought once the money ran out and the image of the infallible Elon Musk starts to wane, a lot of those retail investors will also start realizing that 79 times price to earnings earnings ratio is too exuberant. And while Ibrahim believes in the EV company long term, he thinks that the price tag is too much. He said, "I believe the right price is around 400, so I'm going to wait on the sidelines until I pick it back up at that price." At this point, Ford asked him why $400 and why doesn't Tesla get Netflixed, given that there will be competitors who are going to get into the space and have success, but haven't really succeeded in EVs yet, but they have been streaming, and that eventually has caused a re-rating in Netflix. For Tesla enthusiasts, this kind of analogy between Tesla and Netflix does not really make a lot of sense. Still, Ibrahim answered, "It will happen at Tesla. I don't know if it'll be crushed to that degree, and even if it does, I'm a long-term bullish on Tesla, so even if it goes below $400, I'm happy to hold it again for the long term like I did, because I see it breaking through the $1 trillion and $3 trillion mark in the long term. But we're talking about maybe even 8 to 10 years ahead, and I'm happy to be a long-term holder of this stock." He said that there are 7 models of EVs entering the market, both on the low end and the high end of the market, so the association between Tesla equaling electric vehicles will start to dilute over time as consumers have more options. He also commented on Musk being a controversial leader, which has an impact on the company and its stocks. He said, "I'm shaking on the Tesla consumer long-term just because the brand is getting a little tarnished. The association of it being a symbol of the future is getting muddled with a lot of erratic behavior from the founder. It is no secret that Tesla CEO Elon Musk is indeed a controversial leader. However, most people see it as a ploy to make his name known and Tesla as a result. Some say that this is a brilliant marketing strategy without having to spend a single penny. Tesla is currently sitting at $891.83, and investors are becoming more and more optimistic about the EV company's continuous success. In fact, despite lowering his Tesla price target to $1,200 from $1,300 due to Tesla's Q2 delivery being cut to 270,000 units from 316,000, Morgan Stanley analyst Adam Jonas remains bullish on Tesla. That reduction, according to Jonas, is due to Tesla's Q2 delivery forecast volume being cut to 270,000 units from 316,000. Aside from Jonas, Wedbush analyst Dan Ives is a well-known Tesla bull. He continues to list the company as one of his top tech picks. Ives believes Tesla should begin to see some light at the end of the tunnel as both production and demand issues become resolved in China. Though Tesla has announced a slowdown in hiring and plans to cut 10% of its salaried staff, Ives point out that many companies are cutting in less profitable areas to preserve margins. The analyst also sees new hiring in manufacturing, especially in Austin, a ramp-up in Berlin, and a potential second factory in China as indicators of the company's continued growth. On the more pessimistic end of the spectrum is Barclays analyst Brian Johnson, a longtime Tesla bear. According to Johnson, the stock's valuation is simply disconnected from reality. With a price target at $370 per share, the analyst believes shares have another 50% to fall before they reach their fair value. Johnson, looking at the gap between Tesla's $1 trillion valuation and its $200 billion target, says there is a lot of fluff built up around Tesla's investments in robots, robotaxis, and alternative energies, all of which remain very speculative. It is not surprising for analysts to have varying options about stocks, especially those as controversial as Tesla, which was the first to introduce electric vehicles in the market. For more Tesla stock content, make sure to visit our channel and watch our other videos.